Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, October 1st, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the developer and president of Simple Market Signals at simplemarketsignals.com. We will come back to this chart in just a couple of minutes, but I want to start off with a weekly candlestick chart of the S&P 500 to get a big picture view of what's been going on, and then we will work our way down to the shorter term charts. So each candlestick on this chart does represent 1 week of trading. We have 3 simple moving averages. The green line is the 10-week moving average. The orange line is the 20-week moving average, and the blue line is the 40-week moving average. And for the week, the S&P 500 was down 2.21%, and we closed at 4357.04. Now, this was the second week in a row, as you can see here on the tails of these candles, where the S&P 500 has traded below the 20-week moving average. And this is the first trading that we've had below the 20-week moving average since back in October of 2020. So it's been quite a while, almost a year since we've had any trading below the 20-week moving average. And we did close just slightly, right? We closed at 4357.04, while the 20-week moving average finished up the week at 4361.78. So we did close just slightly below. It's hard to even see it, but we just closed slightly below this orange line, that 20-week moving average. And again, this is the first time that's happened since clear back in October of 2020. And where we closed at 4357.04 is 188.81 points below the all-time intraday high. The all-time intraday high happened back here on 9/2, and we'll take a look at this on a couple different charts. But on it's just good to know this stuff, guys. So bear with me here because this is important, right? Gives you a big picture perspective. But on the 2nd of September, the all-time intraday high, not the closing high, but the intraday high, 45.45.85. So where we close today, we're down 188.81 points, or 4.15% below the all-time intraday high. Now, I know for a lot of people it probably feels worse than that, but we're only down 4.15% where we close today on the 1st of October. We're only down 4.15% from the intraday high back here on the 2nd of September. And in case the market does continue to roll over, now it looks like we might have made at least a short-term bottom here in the last couple of days, and I'll show you that here in just a second. But if the market does continue to roll over for the next few weeks or so, and if we find ourselves down at this 40-week moving average, that would mean we would fall another 4.70% from where we closed. So where we closed today is 195.56 points above the 40-week moving average, and that equates to 4.70%. The next chart that we're going to look at is an hourly candlestick chart of the S&P 500 that goes back to the 1st of July. Now, what's so important about this is we started off July 1st, 3 months ago, guys. We started off July 1st right around this 4305 level, which is this bottom blue line here, okay? Now, I'm not going to go all the way through all of these trades. I've been using this chart for a couple of weeks, so if you want to see all of, this information, go back over the last couple of weeks. But what I want to do is kind of pick up from here, right? Just knowing that we started off 3 months ago, the 1st of July, at 4305, just kind of keep that right around this 4305 level, this bottom blue line. Just keep that in the back of your head for a second. But let's fast forward to the all-time intraday high on 9/2, which we know was 45.45.85 right there. And then what's happened since then, of course, is the market sold off. And back here on September 20th, we came right down to this same level, right? We round-tripped, if you will, down to where we had traded the first trading day of July and stopped right there, right? You can see the tail of the candle stopped right above this blue line here. And I've got a shorter-term chart, and we'll look at this here in a second, even at kind of a close-up. But I really want you to see this with your own eyes, and then we'll zero in. And then we ricocheted off of that level, and by the end of a week ago, we got back above this 4440 level, which has been a really important support level since, the really the second week in August right here, as you can see. But over this last week, we fell back below it and then fell right down again today, the 1st of October, and we had some trading below, right, this 4305 level. But as you'll see in the next chart, none of the bodies on the hourly candles actually closed below this level. So right now, at least for right now, we have what appears to be a short-term double bottom around this 4305 level on the hourly charts, okay? But I wanted you to see why this is so important, because this 4305 level, right, and we'll look at it again on the next chart, but this 4305 level has been in play for 3 months now, okay? This 4350 level is also super important, and that is a level that's just below where the 100-day or the 20-week moving average, they're pretty equivalent, but this 4350 level right here, okay, just kind of keep that in the back of your mind, but that's this level here, and you can also see that it did provide some support, right, especially over the last couple of weeks. It's provided some support on the charts. So the 4350 level is also super important, but really even more important is this 4305 level. And with that said, let's move on to a close-up version of what we just looked at. So this is also an hourly candlestick chart of the S&P 500. We have the 4305 level, the 4350 level, and again, you can see this double bottom that we have put in on 9/20, and then today on where I'm shooting this video on Friday, the 1st of October, right here, okay? But look at this. None of the bodies of these candles none of them have closed beneath. They came really close, but if you can see right here, none of the bodies of these candles on these hourly candles closed below this 4305 level. However, we did have some trading below the 4305 level, and on a double bottom, that's what you want to see. You want to see the lower level, right, that second trip down to that same level. You want to see it slightly undercut the previous version, right, the previous low right there. So the fact that we went up, came back down, and slightly undercut the trading on the 20th makes the trading on the 1st, and then the fact that it rallied up, makes this trading that technical double bottom that we like to see. Now, the fact that we got back up to right around this level, right, which is going to put us right around that 100-day moving average on the S&P 500. I don't have any daily charts to show you right now, but just keep in mind this 4350 level. It's going to put you right around that 100-day moving average on the S&P 500. The fact that we closed above this is a good thing, and the fact that we put in what appears to be a double bottom around this 4305 level, again, is a good thing. Now, we'll just have to watch over the next few trading sessions and see if the S&P 500 rolls over and starts to close on an hourly and then a daily basis below 4305, or, can we continue to close above 4350 next week and move forward and consistently stay above that 100-day moving average and then move our way back towards like the 50-day moving average. Guys, there's no way to know at this point, but from a technical standpoint, I do like the fact that we have at least put in a short-term double bottom on the hourly charts, but we will want to see follow-through on this next week. Let me ask you a few questions. Do you manage any of your own money, including in your 401k or your IRA? Have you ever found yourself out of sync with the market, underexposed when the market is rising, or overexposed when the market is declining? If you answered yes to any of these questions, please pay close attention to the balance of this video, because it could be worth a lot of money to you going forward. Do you have a stock market risk management and trend direction system in place? Do you know the various risk levels in the stock market on an ongoing basis? Do you know when it's safest to be in equities? Do you know when it's most dangerous to be in equities? Do you know the direction of the trend of the stock market? My system is Simple Market Signals. Simple Market Signals is market-based. There's no opinions, forecast, or guesswork in Simple Market Signals. It took me over 20 years to develop Simple Market Signals. I developed simple market signals by reverse engineering the stock market, and I studied the stock market over numerous time frames, including numerous bull and bear markets. And what I found is that certain conditions exist during various market phases, and then I created simple, easy to understand signals around these different phases of the markets. And the thing is, guys, that most people don't know about or have access to the data necessary to do the research that I had to do to create this model. Simple Market Signals is a proprietary stock market risk management and trend direction model. And Simple Market Signals is perfect for financial professionals and individual investors. There's two major components to the proprietary model. There's a risk level signal and there's the general trend indicator. Let's start off with the risk signals. The risk signals are simply green, yellow, and red. The green signal has the lowest equity risk associated with it. And what you're going to find is that most all upward progress in the stock market will be made in a green signal environment. Said another way, it is hard to make money in equities unless the signal is green. The yellow signal means there's moderate equity risk, and sideways to slightly up or down price action is very common during a yellow signal environment. The red signal has the highest equity risk, and the worst sell-offs, including bear markets, will happen when the signal is red. A quick review of the risk signals. The green signal is the best risk-reward ratio signal for equity investors, and what you're going to find is that most upward progress in the stock market will happen in a green signal environment, as we see here. The red signal is the worst risk-reward ratio signal for equity investors, and what you're going to find is that the worst downturns, including the downturn in Q4 of 18 and the bear market in Q1 of 2020, plus the bear market from 2000 through 03 and the bear market of 07 through 09, all of those are going to take place in a red signal environment. Now let's put it all together and see how Simple Market Signals could have helped you during the fastest bear market in history, which of course happened during Q1 of 2020. We had a strong stock market coming into 2020, so the risk signal was green coming into 2020 and remained green for the majority of January. We did have a yellow signal for about 2 weeks towards the latter part of January, first part of February, and then of course the risk signal went back to green. And then on February 19th, we hit what was at that time the all-time high on the S&P 500. Again, that's February 19th. And then things started to unravel from there. But think about this. Just a few days after the all-time high at that time in the S&P 500, on Monday, February 24th, the risk signal went yellow. And then on Tuesday, the 25th of February, the general trend indicator went negative. And that general trend indicator had been positive since October of 19, okay? So right there, just a few days after the all-time high in the S&P 500, the risk signals started to tell you that something was changing, that there was increasing risk in the stock market. And by Thursday, February 27th, the risk signal was red. And then, of course, the market sold off hard from there. So think about this, guys. I mean, you talk about stress testing my model. During the fastest bear market in history, that started just a few days after the all-time high at that time, the all-time high in the S&P 500, in 1 week, the risk signal went yellow, the trend indicator went negative, and then the risk signal went red, all in the same calendar week, actually within 4 days, right? Monday, Tuesday, and Thursday. So you talk about stress testing my model. Guys, I mean, this is the fastest bear market in history, and look at how Simple Market Signals could have helped you during that time. With Simple Market Signals, you will know what the risk level is and what the trend direction is in the overall U.S. stock market. And the proprietary model is based on S&P 500 data. The S&P 500 index really is the best proxy for the overall U.S. stock market, and it's the only index that has all of the data available that I need to run the model. And guys, it's not about beating the S&P 500. However, that is a possible outcome over time if the tools within the model are employed properly. It's about risk management and risk control. It's about controlling your risk exposure rather than letting the whims of the market dictate your future. The best fit for simple market signals is an investor or a financial professional with at least a 6 to 8 week plus time frame that they're focusing on. If you're a shorter term trader or a day trader, simple market signals may help you a little bit, but the reality is that the best fit between simple market signals and a subscriber is somebody that has at least a 6 to 8 week time frame or more that they're focusing on. These signals are delivered to subscribers, our members, in our weekly video. A Simple Market Signal subscription, a membership, is now available to the entire YouTube global viewing audience via a paid membership to this YouTube channel. A video membership to Simple Market Signals via a membership to this channel will give you access to all the information necessary to be successful with Simple Market Signals. With your membership, you will get weekly updates on our proprietary risk level signal on the overall U.S. stock market. You will also receive the proprietary risk level signals on all 11 major sectors of the S&P 500, and you will receive the proprietary general trend indicator signal for the overall U.S. stock market, and you will get all of these each and every week. So just to confirm the signal update frequency, we will upload a new video each week updating all signals within our model, regardless of whether there's been any signal changes or not. And that video will be uploaded each weekend, generally on Saturdays before 5 p.m. Eastern Standard Time. But depending on our production schedule, that video could be uploaded anytime over the weekend. We will also add a new video to the member area if there is any signal changes in the middle of the week. So if there's a signal change on either the overall risk signal or the general trend indicator, we will also give you midweek updates when necessary. As a member, you will also have access to best practice videos for successful implementation of the risk signals and the general trend indicator. And you will also have access to best practice educational videos for tips on successful investing. And this video library will continue to expand over time. Let's talk about the membership details. So the video or YouTube membership to Simple Market Signals is $19.99 per month. And that's a recurring billing, right? So every month you're going to be billed $19.99 per month. Guys, that's less than 67 cents a day. And this will be billed monthly on your credit card through YouTube, which of course is owned by Google. And keep in mind, guys, you can cancel anytime. Now, if you do cancel, your membership will remain active for the balance of the prepaid period, so for that current month. And keep in mind that there's no refunds for the balance of the prepaid month remaining after you cancel. And, of course, all memberships are controlled by YouTube. And remember, this is an investment in yourself and your financial future. I have had numerous clients tell me that they've made tens of thousands of dollars or more in 1 year because of their subscription to Simple Market Signals and the information that they get. You know, you think about the ROI, right? The return on investment like that, that is amazing, right? When you think that you could spend a few $100s a year and make thousands, tens of thousands, or perhaps even more, depending on the size of your account, based on that small investment. So, you know, remember, there's always a cost of doing something, but there's always the cost of not doing that thing as well. And when you think about the decision of whether to become a member to this channel and have access to the Simple Market Signals information, you know, there's a cost, right? $19.99 a month for doing this. But when you look at the cost of not doing this, guys, for most of you out there that are watching this, the cost, the lost opportunity cost, the profits that you're going to give back when the market pulls back, right? If you don't have this information and act on it, or the cost of not being in the market when there is a green signal and the market is advancing. The cost of not having this information for most of you is going to be much, much higher than the $19.99 a month, the 67 cents a day, right? The less than 67 cents a day that it's going to cost you to be a member of this channel and have access to this information. And to become a member of the channel and get access to the Simple Market Signals information, you will need to go to the Rodney E. Constable Stock Market channel. So depending on how you found the video, you may or may not be there, but you need to make sure that you go to the Rodney E. Constable Stock Market channel, and then you're going to click on this join button. Now, if you're not signed into YouTube, you will need to sign into YouTube, okay? So you'll need to sign in. All right, and then once you're signed in, then you'll see this box pop up, right? Get access to exclusive perks when you become a member. So you click on the join button and you will see the information here, what you're going to get with your subscription, of course, your membership. And then you click on the join button, and you want to add your credit card information. So as you can see here, you can pay with either a credit or debit card. Enter your card number, of course, the month and year of expiration, security code, cardholder name, and your billing zip code. So I'm going to fill all of this information in, and I will be right back. So once you hit that buy button, which is in the lower right-hand corner of that box, that previous box, you will then get this pop-up. Welcome. It's great to have you as a member. So then you can click on the See Perks. So once you fill all that out and your membership is established, then you will have access to the membership area where you will be able to see the perks, right? And then you go over to the community tab, and this is where you will have access to the various videos, and you just click on those and it'll pull those up, okay? So I'm going to back up here, and so this is where all the training videos will be, as well as the weekly updates to the Simple Market Signals that will be under the community tab. And that's all it takes to become a member. It's quite simple. So join now to immediately start benefiting from this proprietary information.